My name is Michael Guyette, publisher of the Lead Lag Report. Joining me there is Peter Spina. Peter, introduce yourself to the audience. Who are you? What's your background? What have you done throughout your career? What are you doing currently?
Sure. Hi, Michael. It's great to be with you here today. My background in gold goes back to a very early age when I was introduced to precious metals and into investing into gold stocks. I was about 12, 13 years old when I started investing in general stocks, and shortly after, I invested in my first mining stocks, which was right at the bottom of the gold market, right as the gold price was bottoming. Now, gold was $300 an ounce, heading on its way down to $250. So I was a teenager who was introduced to the metals from my parents, who are immigrants from Czechoslovakia, have some experience in different black markets and currency, do different backgrounds and how money can lose its value. I think that's a lot more of a historic. People here in Europe in general understand that a lot more than the United States. So I was introduced to that through that, and as well through Jim Blanchard's newsletter, Brian Lundin, Jim Blanchard's gold newsletter, which at the time was heavily invested in South African gold stocks. So around that same time, I was introduced to the internet in 1994, 1995. So I applied the interest in hobby and investing in precious metals, stocks, and my interest in gold and silver, and started a site called goldseek.com. So I think we were the first gold investor news site, first gold site on the internet. And we're celebrating 28 years now online. And through that period, I have continued to follow the precious metal sector, trying to find the best opportunities in the mining stock side, which has gone through some wild swings in that period, and learning along the way more about gold and silver and the markets, and following what is now culminating to a very interesting moment for gold. So it's a little bit of my background there on the precious metal side.
So I often push back on certain narratives when it comes to gold, one of which is gold needs a weak dollar to do well. And if anybody hasn't noticed, you had a pretty strong dollar, and gold's actually been pretty strong. How has yen performed in currencies outside of greenback?
Yeah, well, first of all, I would counter that argument that the dollar is doing well by the perspective used to say the dollar is doing well, because our go-to mechanism for that perspective is the dollar index. And that's just a measure of really the dollar versus the euro, the yen, and I think the Swedish crown is in that, and a few other ones. So if you really want to see how the dollar is doing, you have to look at the gold price. But the gold price is based off your perspective of where you live. If you're in Japan, the gold price is hitting a record level again, as the yen is losing its value against the dollar and other currencies. But gold is the ultimate measure of all this, and it's showing that the yen is really losing its value. So for the trillions and trillions of dollar equivalent of yen in cash that the Japanese have, they're very strong savers. They're losing a lot of purchasing power. And in the past several months, the past year, the yen has really lost a lot of value. And fortunately for those who haven't protected themselves, their purchasing power has been undercut, and very quickly.
Is there any data that you can track to see what internal demand is for gold in various countries or parts of the world?
The World Gold Council is one of the primary sources. It's debated also. The gold market isn't exactly transparent in many ways. There's a lot of estimates done. I can tell you this, though, with Japan, because when I was starting investing in gold back in the late 90s, early 2000s, the retail public was quite large. They were buying gold. It was around 200 tons a year. And I think the last year they were down to like 40 tons a year. So their appetite over the last decade or so, it just, despite having such huge amount of savings, they really haven't been very active. So I haven't seen anything recently, but I am quite keen to see what those numbers will look like for this year, because I imagine there is quite a bit of a rush. I don't have any strong connections or contacts in Japan on the bullion dealer side to get anything more real time, but I would imagine there is a nice uptick on that side, on that front.
Yeah, and the price action last month in gold was interesting. I put out that post. Gold movement is not just about it getting momentum, but it's also a warning. And obviously this week, that warning ended up being wrong. But it is interesting to me that gold's actually holding fairly well. I would have expected with such a rip in risk-on equity type plays that gold would be a source of liquidity. Instead, it's actually held in. Do you view that as and I know this is all kind of short-term movement, but Yeah, traditionally, is there anything that suggests that when you have that type of a relative strength still there, that that's a sign of a more resilient bull move?
I think it's really exactly. I think it's showing how resilient it is. And having been watching this gold price get smacked down from $2,100 an ounce consistently back down to 1,800, 1,700, and a year ago we were down towards $1,600 an ounce. It just expected that you get a bounce or a rally up to 2,000 and it falls apart. And when it should start falling apart, it isn't. Then that's something else is going on. And I think so many people have been conditioned to this sideways action that every single time in these past rallies that we're looking to make a breakout to record highs, it fails and then sentiment collapses. People just get beaten down and just get so discouraged. So this move is quite interesting because the amount of bullishness within the gold bugs themselves and in general, it's still quite low. I think there's quite a bit of disbelief that there was you expected that this gold price hitting $1,800 an ounce, it had a short covering rally, then the buying energy would subside and the price would consolidate, pull back, and it hasn't. And we do see pullbacks. The buying is right there to support it. So it is in general, the last 2 years, let's see, the interest rates have been rising now for just over a year. And despite that, gold is near record high. So there's a lot of things that are not holding together traditional relationships.
So it does seem plausible to me that you break the all-time highs, but I keep going back to, I think for that to happen this month, you need to have a pretty sizable decline, which can still happen. I joke that all this seasonality that everyone's been arguing for seems to have happened in just 5 trading days. But aside from the flight to safety type of dynamic where stocks go down hard and gold benefits like treasuries, like the dollar, like utilities as a risk-off play, what do you think could also cause as a catalyst gold to maybe push higher finally, independent of stock market movement?
I think right now, and what we've been seeing supporting the gold price recently, it's certainly not the Western investor. It's not the European or gold investor. They've been selling their ETF holdings and shedding it off the market. What we're seeing is a record central bank buying. We're seeing China. We're seeing Singapore. We're seeing Poland. And we're seeing here in the Czech Republic where I live, it's a global movement into gold. And and looking back now, let's see where the war earlier last year when everything set this off, it goes back to the war with Ukraine. And that was a major geopolitical event, which has it's now conflicting, or we're adding to it now with what's happening in the Middle East. So there's a lot of timelines, I believe, have been accelerated on the geopolitical front. There's some big moves being made. Obviously, China's making a statement here ever since the end of last year, or was it January? They started announcing official gold purchases or holdings have been increasing from under 2,000 tons, and now they're marching up every month. They're showing more and more increases. Whether that's actually true or not, their actual holdings is probably a lot higher than they're officially stating, but it's a clear indication that they're moving to gold. They're de-dollarizing and they're moving into gold. A lot of central banks are. So it goes again back to geopolitics. We're going into this new era. And actually, that's interesting to mention that too, because I believe it was Jamie Dimon today, or in the last week, there was a survey done on what's the biggest issue for corporate America. And they're talking about geopolitical risk. So suddenly we've been in this fantastic period of very low geopolitical risk over the last decades. And now there's a lot of risks out there, and gold benefits from that uncertainty, from those risks. Countries that saw what happened to Russia during the sanctioning of their assets, how quickly your dollar reserves can evaporate at your access to your dollars. So there's a lot at play. And I believe starting last year with the war between, I really call it not just Russia and Ukraine, it's really the West versus Russia. This has accelerated a lot of timelines. And what we're seeing as a result of that is a lot of strong gold purchases by central banks.
Are there certain central banks where that is accelerating at a faster pace, maybe in a more surprising way? Or is like trying to get a sense of if there's some kind of fear that's more palpable in certain parts of the world than others?
Well, Turkey, the demand in Turkey has been strong. The demand in China has been very strong. They've been big gold buyers. Singapore suddenly kicked on their gold buying after a long period. So it's not just one; it's multiple. You see it here in Eastern Europe, Western Europe. They were, I wouldn't say famous, they're infamous for their shedding of their gold reserves during the European Gold Accords, where the Swiss sold off half their gold reserves and the British sold everything off and so on. But now, and you see here in Central Eastern Europe, the former communist countries are now building their reserves. There's a very low amount of gold reserves in general by them. So there's been Poland and Hungary and the Czech Republic now adding to it. So you see different areas. And here, like in the Czech Republic, they're an EU country. They are not on the euro. They use their own currency still. So they're one foot in, one not fully into the EU. But they hold a lot of EU debt. And the new central bank head here says he wants to de-risk the holdings in the euro debt and in euros. So he's actually selling that off and buying gold and buying dollars. So that's a little bit different here than some other places. But in general, the big demand is coming out of places like China, some of the big holders of dollars and reserves out there. So each country has a little bit of situation like Turkey. They're battling horrible inflation where China is building up for something much larger down the road.
So when I asked you what topics you want to cover, you had mentioned silver and you called it the green precious metal, which I've never actually heard it phrased that way. So I am curious to hear your thoughts on silver because I get the sense that there are many more people that are amped about silver than gold. Gold bugs were like a legit thing maybe a decade plus ago. Seems like there's many more silver advocates nowadays.
Yes, well, I got introduced to silver pretty quickly through gold at a young age. Excuse me. And back then, silver the U.S. government was still shedding off their huge silver supplies. I don't know, they had like 1 billion plus ounces. And things were looking interesting at $4 or $5 an ounce because production costs were near that. But since then, a lot has changed in the silver market. And one of the main big things is that back then there was other things that were going on. Silver demand side, it was falling off because of photography use was going down. But silver is a really needed industrial metal. 60% of it is used in industrial applications. So it's more of industrial than monetary. But within the industrial demand side, a lot of demand is coming now out through, I would almost call it the mandated demand through the green energy, climate change, this transition to this electrification of the grid and so on. So silver is benefiting huge demand coming out of solar panel use. We've gone from, back about 10 years ago to under 50 million ounces a year to, I think last year was 150 million plus. And then the use in electric vehicles and so on. There's a big demand. So what we saw last year was a record demand for silver. It was 1.24 billion ounces, which is just a really sharply increased over the last several years. But at the same time, the mine supply has stalled. We have been stuck pretty much for the last decade under 900 million, 850 million ounces of million ounces in silver a year produced. There's silver recycling that comes into play, 150, 200 million ounces. But overall, there's a structural deficit in the market right now. And the demand has been forecasted to increase this year to 1.4 billion ounces. I don't think that's going to happen. I think the slowdown in China hasn't really materialized the demand. So it hasn't really impacted the structural deficit yet. But what's been feeding that over the last year plus is inventories from the silver ETFs, from silver investors who have been disinvesting. And in general, demand for silver from investment side has been weaker until recently. It picked up quite a bit last few years, and then this year softening. It's still quite strong, but it's been softening from what we saw last few years. But in general, we're coming to the point here with silver where these deficits are squeezing the inventories more and more and more. And you have a very small market in general. You're talking about over 1 billion ounces of silver a year at $25. This is the $25 billion to $30 billion market. It's relatively small. So it's interesting, you've got the green energy mandate of demand, which is increasing its use. One analyst said that silver for electric vehicles over the coming decades is going to go up to a few 100 million ounces or more per year. So there's increases in demand and the supply is stuck. And of course, this is a general issue with commodities. The investment into exploration and development into commodities has been very slow, very minimal. So there's not a lot to help that out. The only thing that will resolve it is higher silver prices, because then you can start mining lower grade silver ore and other deposits that were uneconomical can come into play. So I think we're getting close to an actual silver squeeze where the demand really starts to eat up the last of the supplies. The investment side of this is very appealing to those who are looking for a lower risk commodity to get into. The production cost of silver right now is in the low 20s. A lot of the primary silver producers, they need their all-in sustaining costs are quite high. So silver in the low 20s is not going to encourage any rush into developing new silver deposits. It's actually discouraging it because there's no return on capital at these prices. So there's very few projects that are interesting right now out there, and so things are slow, and that's coming to a point where you can't just flip things on. You can't just all of a sudden say, oh well, tomorrow we're going to start producing 500 million more ounces of silver. Now it takes a long time to reopen old mines, to find new ounces, and it's becoming increasingly more and more difficult in general to mine from other reasons. But the silver market, it doesn't take a lot of capital interest and not a lot of investment demand to really see the price start to move. So we're seeing declining inventories. We've got silver price that's very appealing, low risk with a high upside potential. And if you look at it relative, say, to the gold price, today the price has jumped quite nicely, but we're almost at 90 ounces of silver to 1 ounce of gold, which is near the top historically of the gold silver ratio. It's very, very high. It's just another indication that the silver price is undervalued. So my belief with silver is the gold price in the past, what tends to happen, the gold price takes off, and then that triggers the excitement, and then investors start to see, well, look, silver is lagging the ratio, it's showing it's really cheap, start to get into the market, and it doesn't take a lot of inflow to spark a price rally. The price is still quite depressed from the record highs that we had seen a decade ago. Yeah, it was about a decade ago. We're under half that value, where gold is under 5% from all-time record highs. So what we see too with silver, when it moves, it really moves. It's a lot more volatile. It's like a high beta gold precious metal. It's really you got to account for the volatility. It has big moves, but when it does move, it happens very quickly. So when gold breaks through 2100 and then momentum and energy really comes in the gold market, the investors come in there. They'll start to flood into the silver market. And I think key technical levels, you can look at the charts. It's pretty obvious. $30 an ounce, you break that, then you're looking up towards $50 an ounce. If you were to account for the actual real inflation adjusted price highs when silver actually spiked to $50 an ounce back in 1980, using the official government CPI numbers, you're looking at $200 an ounce. So if the markets get overly excited, if there's a real big rush in the silver market, the price could get really squeezed higher, and more of a super price spike could happen. So if you're bullish on gold, I think you could be really bullish on silver. And I think that's the appeal, especially the younger investors. Everyone's looking for more upside. Silver has that a lot more relative to gold.
Yeah, which is interesting, because I think that anybody that may have historically relied on a gold-silver ratio staying at a certain average level, right, to trade around, and now the electrification dynamic and that demand changes that entirely.
It is. You have, in general, all commodities, it's hard to be negative on, and most commodities, you have the ones that maybe use copper and these rare critical metals, and that comes into geopolitical questions and concerns too with the critical metal side. But with silver, copper, all these commodities, they're just mandated demand. There's not enough of these metals to have this fantasy world. Basically, that's what the people in power have, this fantasy world that we'll all be driving electric vehicles in 10 years and it's all going to somehow work out. But unfortunately, the metals and the deposits don't exist. They have to go spend a lot of money, and there has to be incentives and so on to make this happen. And it doesn't match with what they want to happen. So there's going to be a really good period here, I think, for silver, commodities as well. I'm more favorable on the monetary metals, and that's why I like silver, because if you don't have a currency crisis, or if you don't have any really big issues, and gold doesn't really have a big move here. Well, silver, it's got mandated demand and it's got good industrial applications and use that's going to continue to grow. So the downside is minimal. But again, it has a monetary side aspect. So it's got that dual play. I really like how that comes into place. And on top of that, there's also a very large short position in the market. It's the most concentrated short position. It's a lot of speculation on the actual size of it. There are those who claim a lot higher, hundreds of millions of ounces being shorted. What's actual physical? How much of it's paper? It's there's not enough transparency to know, but there's definitely some games that go on in these markets, and that's been primary reason why we still haven't broken out. You continually see this battle between the bullion banks and the speculators who you get the price rallying and the bullion banks are just selling contracts left and right. They kill off the energy, they kill off the momentum, the price resets, falls down, and then they cover from them who are selling, or vice versa. Recently, we're like in gold when we were going down to 1800. They were piling on shorts and the bullion banks were covering. So that was quite interesting. The last several weeks, the gold side has changed, but we have seen some of the large short positions trying to unwind, and I think they're recognizing that the price is ready to move higher, so they gotta be prepared for that. Sure. Well, it's an interesting way to find easier way to distribute gold instead of the traditional brokerage side. It's funny that you mentioned the ATM. So there was a physical gold ATM that opened up here in Prague, not too far away from my house here a couple of years ago, right around the time my son was born. So that was quite popular. It was running out of gold quite a bit. It was the first one here in the Czech Republic, but it disappeared a few months ago, I guess. They, for some reason or another, they removed it. I don't know if the cost of servicing it or what happened, but it seemed to have quite strong demand. So I was surprised that happened. But in general, making gold more accessible has been a trend recently. It was, especially like in the United States, illegal to own gold until the 70s. So all of a sudden, you had to create a whole new dealer network, which is quite a decentralized network in the United States. But now with the internet, now you have more and more bullion dealers have come across that way. And when you're talking about the Middle East and other parts of the world, like in India, like those have a lot more established ways gold markets. But you do see, there was news out actually that you mentioned that yesterday or the day before from the LBMA, I believe it's LBMA. There's over $500 billion worth of gold sitting in London. They want to apply blockchain technology and a way to tokenize it. So ownership, tracking that and all that is a lot easier to transact and make it more accessible and usable as a currency and so on. So I think we'll see more of that. There's other companies out there who are trying to make gold-backed cryptocurrencies, basically just making gold more usable as a currency, because if you're dealing with gold in person, okay, well, it can work. The visibility and so on, all these things. Technology is starting to find ways to make that more possible and usable. Gold easier to hold. The ETFs made a new form for people to invest in gold and so on. But yeah, sorry, go back to your original question on ATMs. I like them. I think there's an interest for them, but they just haven't seemed to really taken off in this part of the world in the past. And there was another European ATM company that also didn't really last long. So I'm not sure if the margins are too small, if there's too much insurance costs or what's going on with them. But personally, I liked having that nearby, and it wasn't too bad on the margins. So yeah, unfortunately, it didn't work out. Yeah, so any more of that, there's Kinesis Money. There's these other ones who have tokenized it and have a debit, Visa or MasterCard that connects to the account, so you can spend money and it deducts it from your gold or silver account. So you see more of that being developed, attempted. It's interesting. But yeah, I am meeting with the gold ATM owners here in a couple of weeks. So I am interested. I will have more information on what happened to that. And maybe they were more focused on cryptocurrencies and precious metals. So see what happens. But yeah, maybe when the gold bull market gets going again and there's more retail interest, they'll probably do better. Right now, it's just like here in the Czech Republic, it's maybe 5% of the population or so that buys physical metals. So it's still not a huge percentage of the population. Well, that is fascinating. Unfortunately, I have not heard about the Bitcoin protocol, and I know there's quite a bit of division. There's some hardcore gold bugs and hardcore Bitcoin bugs. I spent a lot of time in Bitcoin. I got introduced to it in 2011. I spent several years. When I moved to Prague in 2015, I worked in a crypto. It was called the Crypto Anarchist Institute here, and had a lot of different entrepreneurs, playing with different projects and so on. And I really got passionate about Bitcoin back then because I thought I saw this thing had potential. Today, where things are at, I've switched quite a bit my views on it. I think there's still quite a few issues for Bitcoin, from what exactly you own when you have a Bitcoin, which it's quite a bit of an interesting question to ask anyone, because you get quite a bit of a different answer from anyone who owns Bitcoin. But in general, the Bitcoin network has some challenges. It has some interesting projects around it, but I don't see any. I haven't really seen anything take off yet on the crypto side of gold. I know that Tether Gold had something and so on, but in the end, you have to trust these institutions, these people who are custodians to hold these precious metals for you. And gold is about trust. So the best way to break any trust issues is to hold it. And I highly recommend that. But I don't hold all my gold physically. I use different vaulting services and have tried out some of the crypto gold, like Kinesis money things. So it is interesting that there are projects out there, and I think the younger generation will play more around with it and will try to use it more. But I do think between the debate between gold and Bitcoin, I think it's totally incorrect. I think they're totally two different things. It's Bitcoin is more of a payment network. It's gold is a low risk asset. Bitcoin is a high risk speculation, has a lot of challenges. Gold has proven itself sound money, and it's more embedded within the system, where Bitcoin is challenging the system. So there's going to be a lot of powers to be who will fight that adoption. So anyway, I don't want to dive into that side, but I would be interested in, and I will take a look at what you mentioned, because I am not aware of that. It is. And that's why when I talk about gold and I say, I look at cryptocurrencies as a risk, store of speculation. I said it's a store of risk. There's a lot of uncertainty. We don't know which way it's going to go and so on. And that's why right now I really favor gold and silver, because this is a period where we are de-risking, there's deleveraging. And I believe a lot of what benefited the crypto market was this appetite for risk. A lot of the money was flowing around easily. It's the new technology, so people understand it. So people like we saw with AI recently, it's money you just throw money at it without really understanding it. But it has taken some appetite from precious metals. I saw a lot, especially silver investors, 16, 17, they were going after crypto, putting a lot of money into that. So it has taken some interest away from gold and silver. But there's a lot of people saying, well, the younger generation, they don't care about gold. I don't think that's entirely true. You see actually a lot of interest was it Gen X or millennials recently said they were buying a lot of gold. But in China too, where the growth in energy is really happening right now. The younger generation in China, they're buying gold left and right. They see a lot differently. It's a lot more embedded in their culture and so on. So I really find I find how they've weaponized crypto against gold. When I got involved with it, it was about crypto fighting the payment networks, Western Union, Visa, MasterCard, SWIFT, and the control of these centralized networks. And now it's been by some weaponized. Well, crypto is the new gold, and we don't need gold. It's a shiny rock, and so on. It's like, wow, okay. I think you're gonna learn an interesting lesson that it's not going away, and it's actually going to have its time again. And especially with all the currency and debt issues out there, gold is coming back to limelight. So again, gold is a global market, and I think a lot of the younger generations in the West, I think there's too much of a call to say that gold has no more interest or whatever. So I think they'll rediscover it and relearn about it now. And I do think that I wanted to say a positive about crypto and Bitcoin is that it did help a lot of younger people. A lot of people question what money is, how the system works, because we're not taught that at all in school. It's actually the opposite. They teach you how to get a credit card. They throw credit card limits at you in college. I was given $15,000 credit limits back in around 2000 when I was in the university. It's ridiculous. So it's good that maybe there's a wake up call, because we've been living in this system of leverage and speculation and overconsumption and a loss of respect of savings and respecting capital and deploying it more carefully and so on. So yeah, gold reflects different values than what we've seen recently.
I see a few people also want to ask other questions. Those that are in the queue, just follow me and check your DMs so we can coordinate a bit. I want to get your thoughts on the miners. I keep going back to on the stock side. There's that narrative that's been out there for a while that mining stocks are a liver play on gold. I often push back on that because I've done tests on it and it doesn't really seem to be that there's anywhere near a strong correlation as people think. That's not to say there aren't some good opportunities, but you have to go beyond just this is what gold does, so this stock will follow. How do you think about analyzing gold mining stocks, the silver miners, and where there's some really interesting opportunities?
Yeah, well, the sector has been going through a very difficult period. Gold is almost at record highs. So you would think the miners should just be flying through the roof. And they're trading at, some of the smaller companies are trading at 50, 60, 70, even 80% below their highs from a few years ago when they rallied really aggressively. So what happened was that inflation really showed itself up quickly, and it really shows itself appropriately in the cost of mining. So we're looking at gold now, and we saw this in the last week with like Newmont Mining's earnings. Their all-in sustaining costs, their true costs are well over $1,400 an ounce. Their Canadian mines are almost breaking even. The production cost in gold has been going up and up and up very aggressively. So when gold back 10 plus years ago ran up towards $2,000 an ounce, the production costs were rising, but they were still several $100s an ounce. So it was a huge margin. You're making huge amount on that. Profit margins have been squeezed. They've been getting squeezed aggressively after the price ran up in 2020. So the last few years, you see companies making 20, 25%. They sell something for 2,000 and they're making for 1,500 almost now. There's a lot of pressures on the mining companies. You also have geopolitical problems. You have new taxes. You have in certain countries different issues where capital controls are taking place. So it is not an easy business, and over the long term, it is not a good place to be. But when the gold price really moves, and when it's moving up at a lot faster rate than the production costs are rising and the margins start to expand, that's when it will get interesting. So I think what's happened in the last few years, a lot of the miners, they had this initial pop, but it was good with the gold price going from near $1,000 an ounce to up to 2,000. It revived a lot of, it's getting to a very, very difficult situation for a lot of the companies. Now they have cut a lot of costs. They're operating more efficiently, but they're battling other costs, energy costs for everything from engineers to geologists to drillers and everything. Everything just keeps going. But there seems to be now a bit of a slowdown in that. But yeah, so the mining stocks have had all sorts of negative pressures on it. They have severely underperformed the metal. If on a long-term basis, they're at historic lows, the gold stocks versus the metal. So what it's going to take, it's really going to take a gold price, not 20. You can see gold stocks do very well if the gold price ran at 2,500. But if it doesn't really keep running and go to 3,000, 4,000, 5,000, you're not going to see these spectacular gains that we did see like in the 1970s, where you saw some companies not just go up 5, 10 times, they went up 20, 50 times. And in this sector where things have been so beaten down, I like to focus on exploration stocks, a lot of very small, tiny micro cap companies who are very dependent on the market to raise capital. So as their share prices have been collapsed, the interest in the sector has collapsed. They've been diluting themselves. So the shareholders have been affected. So this period has really not been a good time for shareholders. But as this market breaks out to record highs, I really think we're going to get through another period, and you could time it right where you should really leverage yourself to the precious metals. The concern is going to be, though, you're going to get a period, I think, of really, really, really good returns in the miners. Exploration stocks will do even better. But then you'll start to have other risks come on. If things are getting really difficult, inflation still going hard, and these gold companies are making a lot of money. You're going to see more greedy governments step in, try to tax them more and do other things. So it's not an easy game. It's not easy to be a miner, and it's not just gold. It's all commodities. So the physical metal in the end is really a lot more valuable than the market is saying they are right now, especially considering all these difficulties. So I've been watching the cycles over the last almost 3 decades now in the miners. So I don't see a lot of downside risk in this sector right now, except if there's a big market crash, you might get a initial downdraft like we saw, and then it takes off. But I think their time is coming. They've been so beaten down. No one cares about them. They've been left for dead. Gold is near a breakout point. If that takes off, then these stocks, it doesn't take a lot to get them going. And again, they're so beaten down. And some of them have good improving or decent balance sheets. So they're in a lot better position they were years ago. So I'm a lot more favorable and optimistic. So I'm surprised how weak they are at these gold and silver prices, but it's a real reflection of the sentiment. People, investors in our sector have gotten excited too many times. They've been wrong. The stocks run and then they fall severely again. So it's just, at this point, it'll take a real big push past $2,100 an ounce to spark that. And if gold really starts to take off, as I said, to 3, 4, 5,000 an ounce, boy, those margins on those ounces will really explode. And you'll see finally a reward for all those patient investors. Sure. Well, I use technical analysis as a secondary method approach. I always look at the fundamentals and then apply technical analysis afterwards. So just looking at the gold chart, it's pretty, we've had 3 major attempts to record highs over the last years. This is ready to blow. It's to me, it could be weeks away. It could be before the end of the year where you see gold make a stab for record highs. Breaking through that record 2,100 level is going to bring on a lot more momentum buyers, speculators, and so on. And so you can see a real acceleration. And we've seen that in the past too with gold. When I started, as I mentioned, I started following gold. It was at $300. It fell to $250, and then it ran to almost $2,000. It had 8x basically increase from its lows. So when from 2011 basically down until now, we've been falling or going sideways. And you saw it in the 70s when the price went up from 35 to 850, almost peaking 20 sometimes. So it's these moves can be huge. And obviously it has to be backed by what's really happening with all of the massive amount of printing, the trillions of dollars and trillions of euros and trillions of currency units that have been printed, the amount of debt that keeps growing, and the trillions more that they'll have to monetize to keep this from turning into a vast deflationary crash. So there's a lot, I think, that's going to feed this next rally. Their gold looks really ready to go. The central banks are supporting it here. So yeah, I think technical analysis here will confirm that, again, this $30 silver is a big one, and 2,100 on gold, and it's takeoff time.
Peter, talk about your website and some of the other type of work that you do.
Sure. So I started goldseek.com in 1995. Then 2002, launched silverseek.com, so focused on silver. So both sites are a platform for various authors to contribute their analysis on the gold and silver markets. So we have different opinions and views on the markets there. I contribute myself on there, various things, and I'm on Twitter as well at GoldSeek. But I help investors look for good opportunities in the sector. I help to cover the precious metals sector in general to help guide them, especially emotions, because it is a very emotional investment in many ways because it's so volatile. So you have to have the right expectations and the ability to deal with the volatility, especially if you're getting into the mining stocks. It is a very higher risk game. So you have to be careful to understand what your risks are. I help a lot of junior mining companies who have some excellent technical individuals help find investors for them, because what we find a lot of time is that geologists aren't the best at finding investors and managing or raising capital. So I've helped companies find investors, especially smaller exploration, juniors, so on, and just consulting, helping them develop their business strategies and so on. I've been following for so many decades now that I've gotten involved in consulting, helping in different ways. But my primary interest remains investing in the sector. I started this site investing as a hobby, investing in junior mining stocks and gold and silver primarily. And so that's where my main focus is on the site is junior precious metal stocks and the precious metal sector. Well, there isn't. Well, one of my largest positions is in a company called Fortitude Gold. They're not producing huge amount of ounces. It's like 40,000 ounces a year, but very high margins, like almost well under $1,000 all in sustaining costs. So they have 24 or 25 million shares out there, and they're giving like an 8% dividend yield right now. So I use it as an example to other companies. Say, start paying more of a dividend, start rewarding your shareholders because your share price gets rewarded too. You see a lot of investors who are attracted to this company because they have no debt and they're paying a nice dividend. So I think other miners need to start doing that more. I remember reading about especially South African gold miners back in the late 70s and 80s. They were paying massive, I don't know, it was like 20, 40% dividend yields. It was incredible. So I would expect that dividends to really kick back on as the companies are in a better position. There's going to be a lot. They still need to invest in new develop, especially larger miners. They're depleting their ounces so quickly. So there's still a lot of capital needed. But if the gold price were to really take a quick move and they're just cash flowing really aggressively, I would fully expect more dividend increases. And we have seen a little bit here and there, but yeah, it's still that's going to come with record gold prices. And I really do advocate that with the junior miners that they should do that. Some of them have been doing the stock buybacks now, trying to support their depressed share prices instead of dividends. I know some investors prefer that, so we'll see. But I do think there's a lot more upside. Obviously, there's not a huge amount of dividend paying at the moment.
Other than the website, Peter, I'm going to assume that most people can just track you on X. Any other places that you point them to?
That's primarily it. I do some YouTube interviews with some of the junior mining companies, so you can find them on YouTube, but primarily, through Gold Silver Seek and then on X.
Everybody, again, please make sure you follow Peter. I will have this as an edited podcast in a couple of days here, and hopefully I will see you all next week as I continue to do these spaces on the regular here. Thank you, Peter. Really appreciate it.
Likewise, Michael. Appreciate it being on. Thank you. Sure.